What is up, everybody? Welcome back to the channel. In this week's video, I'm going to be going over a company that has been in very high demand on the comment section, down in the comment section. And if you want some proof that I read and listen to all the comments down below, this was a very heavily in demand company for me to look over, so I am going to look over it. It's not going to be as long or drawn out as my previous analysis videos because there's some things with Nutrien that would keep me from ever investing in it, and there's also some things that people need to understand about Nutrien and other companies that rely so much on a single commodity, and how realistically, it's not even the operations of the company itself, but the overall demand, supply, production of the underlying commodity they track, which makes them very, very difficult investments to hold long term. So for that reason, I'm going to be going over Nutrien in this video and kind of explaining why I don't invest in companies like this, discussing why Nutrien did so well in 2022, why they're doing so poorly right now, and just overall give my thoughts on the company. If you want 3 stocks that I do really like for 2024, there's a link in the description. You can join the newsletter and you get them for free. So digging into Nutrien, Nutrien is going to be a company that is very reliant on the price of potash, the price of nitrogen. Effectively, it's a fertilizer company. So what ended up happening was the potash supply effectively during the Russia-Ukraine conflict back in 2022 that ended up putting, some significant impacts to the supply chain. The price of potash went through the roof, and as a result, Nutrien benefited significantly. So what has ended up happening and why the company has struggled so much is the price of potash is kind of normalizing, supply is normalizing back to pre-pandemic levels, and there's just not as high of demand because there's more supply. And for that reason, I mean, if we go to the actual price of potash, this is going to give you a very, very good indicator of how volatile these companies are, especially the ones that focus on a particular commodity, how volatile they are to the individual price of that commodity altogether. Now, when we look to this chart here, we can see that Nutrien, I mean, they only started the merger of Potash Corp and Agrium back in 2018. So that's why you can see prices from 2018. But the one thing I really do want to highlight is this run up in the price of potash. So we look to the potash spot price is $202.50. We can see it skyrocket up to $1,202. So that was in May of 2022. We can see that the prices actually, they started accelerating quite a bit during the COVID-19 pandemic. We had some supply chain issues, things like that. But where they really start to accelerate is in February of 2022. And what happened in February of 2022? Well, the Russia-Ukraine conflict started, and Russia is a big exporter of potash. I mean, when we look to the 3 major companies, we look to Canada, Belarus, and Russia, they accounted for more than 75% of total potash production. So when a global conflict like that on such a major player in a specific commodity, when stuff like that happens, it's bound to skyrocket the price of the commodity. And if we take these peak prices here, we can look to Nutrien's results and we can see like revenue from, let's say, September 2020 to the, September 2022. It effectively, just shy of doubled. We can look to free cash flow per share. In 2020, it was at $4.17. It got all the way up to $13.55 per share, free cash flow per share. When we look to diluted earnings, we can see, in 2020, $1.22. And then when we get up to 2022, $17.95. This was a significant cause of the price surge in Nutrien. And actually, if I add its price in here, we can see its price went, through the roof as well. We can see prices down at the bottom here. They went from, let's go to late 2020, $54 a share, all the way up to peak prices of around $144. So it nearly tripled. And that does make sense because it's free cash flow per share nearly tripled. Actually, it just over tripled. So you can see why the price action of Nutrien was like this. But what ended up happening, I mean, you can see the price of potash absolutely collapse. And as a result, Nutrien is going to collapse with that. It would be much like an oil producer, a producer that relies heavily on the price of crude oil. When crude oil goes down, no matter how well they're operating, they're going to realize lower prices when it comes to their results. And as a result, and if we go back to this chart on the results, I'll remove the price here. We can see revenue of $49 billion in December of 2022. That's down to $36 billion. We can see Free cash flow per share of $11.29. That's down to $7.28. And we can see earnings per share of $17.95 all the way down to $2.17. So ultimately, they're realizing lower prices. And when we dig into the actual quarter on the potash results, we can see, Q2 2023, $656 million US dollars. And when we look to Q2 2024, we can see $397 million. And they kind of show you what is impacting the overall results that is causing this decline in revenue. And you can see a gigantic portion of it is from lower net realized selling prices. I mean, effectively all of it, because sales volume actually increased. So when you think about this, the company is doing pretty much everything right from an operational standpoint. It just isn't realizing those high levels of returns just from higher realized prices for potash. I mean, we can look here, average net selling price, $298, and it's down to $212. And when you think about it, this is from 2023 to 2024. When we would factor in 2022 to 2023 to 2024, they would be even lower. So this is just the quarter. When we go down to the whole year, again, it's much the same. $1.3 billion in potash revenue. Look at this big red drop in the average net selling price. That is killing their sales, down to $852 million Q2 year to date. Many people have what is, a bit of a recency bias when it comes to returns. They'll see a company like Nutrien doing so well, going up. They don't quite understand how the company operates under the hood. They end up seeing the strong results. They'll buy it at peak prices or near peak prices. Potash continues to fall. Prices continue to fall. People don't quite understand what is happening. This is exactly what's happening. As I mentioned, potash prices have started to normalize following a period of volatility following Russia's invasion of Ukraine. Increased exports from Canada have also boosted global supply and brought down prices. So this is all a simple supply and demand. In 2022, there wasn't enough supply. There was big demand. Prices skyrocketed. Nutrien realized absolutely outstanding results, generated a ton of free cash flow. But when we look to the overall outlook for potash, the market value is expected to grow at a compound annual growth rate of 5% during the forecasted period of 2024 to 2029. Potash market demand is expected to rise at a CAGR of 3.2% for 2024 to 2029. It is highly unlikely that we see Nutrien head back to these prices anytime soon. I mean, we're talking $144 a share. It is highly unlikely. It's highly unlikely that they ever trade at those valuation multiples again. That said, it could grow back to that price over time by increasing efficiencies, maybe a rising price in potash if, there's a supply and demand imbalance again. But overall, I mean, when we look to the overall price of potash, and actually I'll see if I can max this out and get a wide range. So effectively, there's only been two situations where we've witnessed a sharp spike in the price of potash. One was during the great financial crisis in 2008, and the other one was during the COVID-19 pandemic, Russia-Ukraine war type situation. It is highly, highly unlikely we ever see those prices of potash again. I mean, they were the highest in history. They were more than, they were effectively double the previous spike. And overall, I'm not going to say that I'm an expert on the price of potash. Trust me, I'm not saying that, but just looking at a chart like this, it's highly unlikely that we ever see potash prices spike that high again. And as a result, it's probably going to take Nutrien, a long time to grow back into that $144 price point. So if you did buy in at that point, I'm not saying that the company can't produce strong results moving forward. They probably can. I would argue that the stock is a little undervalued at this point, but the price of potash does continue to decline as, demand normalizes. The supply chains get, a little more effective post, not post-crisis, but, post-supply shock value. So for that reason, they're probably going to grow earnings at the normal pace they did prior to the pandemic, which is, this is a slower growing blue chip stock here in Canada that is heavily, heavily sensitive to the price of a single commodity, which is exactly why I would never own it. I mean, we have earnings per share of $6 in 2023. They're expected to come in 80 cents lower at $5.20. And then we have $5.48, which is low single digit growth next year. And then in 2026, $5.57. Again, low single digit growth. anybody who's expecting Nutrien to return to where it was during that, supply shock, unless there's another one, that is highly unlikely to happen. And overall, I just think this, is a company that's probably going to grow relatively in line with its earnings. I mean, we can see it's trading at 12.2x expected earnings, which is relatively cheap. I mean, it's trading at 9.1x trailing 12-month free cash flow, which is a pretty big discount to its 5-year median averages. But the difficulty here is the price of potash keeps falling. So at what point, does the price keep falling? Nutrien keeps realizing lower prices, and then ultimately, that this trailing 12-month price to free cash flow actually normalizes back to that 12x range. Overall, the company has done nothing wrong from an operational standpoint. It is just at the mercy of commodity prices, and this is a very, very focused company, on a specific commodity. And so for that reason, it's effectively at the mercy of the markets, of the commodity markets and the supply and demand. And it just isn't there anymore post Russia, Ukraine supply shock from the war, and plus the COVID-19 pandemic supply chain situation. So we're likely to see much more normalized prices. And, as a result, I would expect Nutrien to just kind of grow in line with its earnings. As I mentioned before, would I be a buyer of the company? No, probably not. I mean, most all of the companies that I invest in are going to be ones that are able to grow earnings and revenue at a steady pace and not be so reliant on a single commodity. I mean, effectively, the only commodity-driven stocks that I would ever consider owning are maybe some premier gold players. Like I had mentioned, Agnico Eagle Mines in a previous video. I'll drop a link up above if you want to watch that, and maybe something like Canadian Natural, leading oil and gas producer, Tourmaline Oil, leading natural gas producer. These are proven producers who've generated strong cash flows for quite some time, and even then I would maintain very small allocations to them. I just these companies are just so cyclical that I've never really considered adding them to my portfolio for the long term. So everybody, that's it for the video. Head down below, like the video, subscribe to the channel, comment down below what stock you want me to look over next, and I'll have a dig. This one was very, highly in demand, and I felt it would be good to provide some guidance as to where I see the company moving forward and why exactly this is happening to them, despite, putting up some pretty good operations. And as always, 3 free stock picks down below from Stocktrades Premium. Just join the newsletter. You get them absolutely free, and we'll see you next time for more great Canadian content.